Thanks for tuning in to Business Daily. Coming to you live from Seoul, I'm Lee Ji-yoon. Before we get started, let's see what we have coming up in the latter half of our program. Samsung Electronics saw disappointing results with its net profit for the second quarter sliding 8% from a year earlier due to missed targets on its smartphone sales. Stocks in China continue to tumble as concerns rise over the ripple effects that might stem from instability in the world's second largest economy. We begin with the latest report card from Samsung Electronics. It shows that its net profit in the second quarter tumbled by 8% on year. While its mobile division saw a dramatic slide due to supply issues and stiff competition at the lower end of the smartphone market, its memory chip sector helped dull the blow. Our Song Ji-san is on the story for us today.
Samsung Electronics fared quite well in the second quarter, with profits inching up compared to the previous quarter. Samsung's operating income stood at $5.9 billion, continuing its steady recovery after an earnings shock in the third quarter of last year. Samsung's memory chip sector played a big role in keeping the company on the right track. The division logged profits of $2.9 billion, a 5-year high, and all-time record sales of $9.7 billion. Sales and profits edged up on quarter in Samsung's mobile division, but it's not performing anywhere like its heyday a few years ago. Although still the leader in the global smartphone market with 22% share, the Korean firm was the only one among the world's top 5 smartphone makers to see its market share drop in the second quarter. Samsung failed to meet strong demand for its latest Galaxy S6 Edge model, and handset sales in the lower end of the market slumped.
The momentum for Samsung's latest model launches faded pretty quickly, but the mobile sector will pick up in the second half as it's a better time for the ICT industry.
And that depends on how Samsung's new products sell. Samsung says it will reinforce its lineup of low-end smartphones for emerging markets and premium models for its high-end market. In a bid to recover its share in the large screen or phablet market in the latter half of this year, Samsung will unveil the Galaxy Note 5 and the Galaxy S6 Edge Plus model on August 13th in New York. Song Ji-sun, Business Daily.
10 global investment banks have revised down their growth projections for the Korean economy this year, with their average coming in at 2.6%. Now, that's lower than both Bank of Korea's forecast of 2.8% and the government's 3.1%. A report from Korea Center for International Finance said the banks recognize the economy will be on a recovery track in the latter half of the year, but that it won't be enough to bounce back from the second quarter's paltry growth of 0.3%. HSBC, which had the grimmest outlook, added that officials will have to counter low domestic consumption and continued faltering exports amid a recovering global economy. The majority of Korean companies are still negative about their business outlook for August. The Federation of Korean Industry said that the business survey index for next month stands at 89.6 after surveying Korea's 600 largest companies by sales. A reading below 100 indicates that more firms are pessimistic about future prospects. The gloomy outlook was mainly due to lingering effects from the MERS outbreak and uncertainties from the wobbling Chinese stock market. The Federation called for the swift implementation of the supplementary budget and eased regulations to spur more investment. Meanwhile, Korea's top 3 shipbuilders all posted massive losses in the second quarter. Industry data show that Hyundai Heavy Industries, Daewoo Shipbuilding and Marine Engineering, and Samsung Heavy Industries recorded a combined operating loss of $4.1 billion. The losses largely stem from construction delays on offshore projects like oil and gas rigs. All 3 of them ventured into offshore oil rigs to avoid direct competition with Chinese shipbuilders. Now, parents, you might want to double-check the summer pool toys that you're going to buy for your children. A government organization recently found that popular summer toys on the market contain harmful chemical substances and pose potential safety risks to children. Our Chuyoung tells us more.
From airboats to swim rings that come in different shapes and sizes, these are some of the popular inflatable water toys for children during the summer. But a recent survey revealed that some of the goods may pose serious health risks. According to Korea Agency for Technology and Standards, out of roughly 300 toys inspected, 17 products did not meet safety standards, prompting product recalls. This paddle snaps in half almost immediately after use. And these swimsuits were deemed unsafe due to loose straps that can potentially get caught elsewhere and the detection of hormone-disrupting bisphenol A, or BPA. In fact, these chemicals that can cause major disorders in the internal organs were in some airboats at 178 times the legal limit.
BPA can potentially cause infertility in women and reduce the sperm count for men. It can even have greater consequences for children.
The agency found that out of the 17 products warranting recalls, Korean conglomerate Elan was one of the main distributors.
We express our sincere apologies to our customers, and we have taken measures to stop all sales of these products in our stores.
Many of the products with defects were found to be produced either in China or Indonesia. The safety agency is urging consumers to demand refunds or exchanges if such goods purchased from local stores are found to be on the list of unsafe products made public on its website. Chuyoung, Business Daily.
In a unanimous decision, the U.S. Federal Reserve kept its 0 to 0.25% range for the Fed funds rate, while giving no hints about when a rate hike might be coming. The U.S. Central Bank's Open Market Committee said it will raise rates when it sees the labor market further improve and when it's confident that inflation is moving back toward 2%. In terms of its view on the U.S. economy, the Fed sees it growing moderately, with jobs increasing and unemployment falling. Analysts generally believe that the Fed will start to gradually raise rates in September. The Fed has held near zero rates since late 2008 as part of its efforts to spur recovery from the global financial crisis. And now let's see how the markets fared here in Seoul today. Seoul shares ended lower on Thursday as investors dumped tech and other large cap shares following disappointing corporate earnings, while U.S. Fed kept its funds rate near 0%. At the closing bell, the benchmark Kospi fell 0.91% to finish at 2019.03. While the tech-heavy Kosdaq lost 2.41% to end at 712.86. On the foreign exchange counter, the Korean currency lost ground against the greenback, ending at 1,168.41. There's a lot going on over in China's stock markets as the shares have been entering a free fall in recent weeks. Now there are concerns that the Chinese stock collapse could set off another round of currency wars as Beijing takes various measures to shore up the market. Let's take a closer look.
Topping the business headlines these days is China's stock market and its extreme volatility. Despite government rescue efforts, shares in China recorded their largest one-day fall in 8 years at over 8% on Monday. Beijing has been struggling to contain the market rout, announcing earlier this week that it's prepared to buy shares to stave off instability. It also said it will increase flexibility of the yuan and allow the currency to trade in a wider range against the dollar. Experts say such a move may be a sign that the government is ready to allow its currency to depreciate further, which could have a major impact on the relative competitiveness of neighboring countries. Could this set off a fresh round of currency wars, and how will this all affect Korea?
And to tell us more about this, we're now joined by Professor Chuyoung from Yonsei University. Welcome to the program.
Hello.
All right, so Chinese shares have been sliding, but then it rebounded on Wednesday, just showing how much volatility there is in the China's market right now. But what's the situation looking like right now at the moment?
Yeah, the stock price in China has dropped for a month, but last week it was a particularly sharp decline. The fall on Monday, 27th, was the even biggest in over the recent 8 years. Chinese government intervened to rekindle investor enthusiasm, but still the market continues the downturn, although today it went up slightly by 3%.
All right. Well, the Chinese government has been proactively engaging to contain instability. How effective do you think this has been?
Well, the Chinese government had made two types of actions, both positive action and negative action. Positive action intends to support and encourage the stock market performance. For example, the government increased subsidy to help securities authority play its role of large institutional buyer. At the same time, negative action includes prevention of short stock selling if the selling amount is too large. Also, the Chinese government is conducting a nationwide investigation on suspected stock price manipulation. So, when the Securities Authority introduced several supporting policies, in fact, the market bounced back. But the problem was the Chinese investors perceived it as the right timing to sell. So, unfortunately, those policies backfired.
All right. Well, the market rout has created a sense of anxiety among the China's public. And what kind of effects has the country seen so far?
Well, we need to understand the structure of Chinese stock market. Chinese stock market is characterized as individual investor driven, as 80% of transactions were made by individual investors. It's a big contrast to the United States or Europe, where large institutional buyers are leading the market. So, how do the Chinese people feel about it? Of course, they are panicked, obviously. The investor suicide cases due to a sharp fall in the stock market continued. And what is worse, combined with inflation, the recent situation may go beyond the stock market thing, even threatening the legitimacy of the Chinese Communist Party. That's what the Chinese Communist Party is most afraid of.
All right. Well, then how is the slide in Chinese shares affecting the Korean economy?
Well, the sharp decline in the Chinese stock market, altogether with unstable U.S. stock market, dragged down the Korean stock market for a recent few days. But yesterday, Kospi index bounced up, right? So right now, but it's not clear whether the Kospi will continue to rise or such a rise is nothing but a temporary thing. Another issue is the Chinese stock market is not entirely responsible for the recent fall of the Kospi because the Kospi prices stayed fairly high for recent period. So the Kospi prospect will need more explanations related to the domestic situation as well, apart from Chinese market.
All right. Well, the problem is, though, if the situation in China gets worse, then it's obviously going to have chilling influence on the global economy. I mean, have you seen any of this happening already?
Well, the economic slowdown in China beclouds the world economic outlook. Money pulled out from emerging markets is going to the US dollar. So US dollar is now the strongest ever since 2003. In contrast, emerging market currencies such as Indonesia rupee, South Africa rand, or the Brazil real have been at the lowest value. Not only emerging markets, but the non-emerging markets also suffer from the currency depreciation caused by China. Australia, for example, have heavily relied on trades with China. And the gloomy Chinese stock market caused a pessimistic prospect of the Australian economy. Same thought that the declining Chinese economy would decrease the demands of natural resources, triggered a turn down in the international commodity market.
All right. Well, and as we just saw in the report, Beijing plans to increase flexibility in the renminbi and also allow the currency to trade in a wider range against the dollar. What does this all mean?
Well, due to the limited range of the currency exchange change, the Chinese yuan, in fact, has been the least weak among the emerging market currencies. So allowing more ranges for the currency exchange change will enable further depreciation on the Chinese yuan. China is a global factory, but the sluggish global economy decreased the demands, the customers of the made in China goods. So the recent fall in stock market triggered the Chinese government to make an action by attempting to weaken the Chinese yuan for export promotion.
All right, then this must be bad news for Korea's already sluggish exports.
Sure, definitely. It's going to be a double torture, say.
Double torture.
Export decrease and the price competitiveness decreased. The relevant data has demonstrated that the China export-oriented Korean firms have been less profitable over time. So the Korean exporting firms are kindly advised to diversify exporting markets, moving up to high-value product in order order to cope with the change in the global economic layout.
All right. Well, considering that Beijing is Seoul's biggest trading partner, I guess whatever happens in China will have a lasting effect on the Korean economy as well. So what are some factors that we should keep an eye on from here on out?
Well, overall, what's happening in China is change stock market is to remove bubble and to restructure economy. If I borrow the Chinese government term, that's back to normal. So other macroeconomic indicators began to flicker a long time ago, but only the stock market index was flying high. That was very far from being normal. So in principle, we should appreciate China's painful process to back to normal. I would suggest a soft landing scenario where Chinese government would intervene more deeply and more extensively. Well, they have the capacity. It's state capitalism, and they have a past experience of maneuvering soft landing successfully. And further, although it may be a disappointment to the Chinese government, but Chinese economy is still growing at 7% every year. So, but well, there is a still high possibility of the continuous fall in the stock market. But it is, again, it's the process to go back to normalization. Well, we hope that the normalization process would not give less pain to the Chinese people. The economy between Korea and China is very close. So we don't want radical change to happen in China. It's going to be a big smash on the Korean economy.
All right. Okay. Thank you so much for your insight today, Professor.
Thank you for inviting me.
And that wraps it up for today, but we'll be back tomorrow at the same time, same place, so don't forget to tune in then. Thanks for watching and see you soon.